let's get into your pro picks, your top ideas in resources. Pro Picks is brought to you by ATB Financial. With $62 billion in assets, ATB Financial is powering possibilities for more than 820,000 financial services clients in Alberta and beyond. ATB's capital markets arm is a full-service investment dealer that offers investment and corporate banking, sales and trading, institutional research, and risk management. Visit atb.com/inthemoney for more information. Okay, you've got 3 ideas from 3 different sectors. Is there a common thread? Are they all just like small caps that you like?
Yeah, I think that the common thread, I was looking at what I picked, it's really talented Canadian management teams and near-term production growth.
Okay, let's get into your first one. Definitely not a household name. And you said you like that. You like owning stocks before they're household names. It's called Champion Iron. What's the play?
So Champion Iron, I guess a little bit of education your listeners may or may not know, but iron ore is, by orders of magnitude, the largest mined commodity on the planet. Way more tons than any of the other commodities we've talked about today. It's really a staple of life. And the big thing about iron is steel. So everything around us is built with steel. That's what iron is being used for. And why I like Champion, it's layered. We'll go into it. But here we have, about a $3 billion company that has iron production right here in Canada. And we are entering a period where they're going to be producing what's called, it's like 69%, or it's a higher grade iron ore. So they're taking about half of their current production, converting it into this pelletized feed. And for any of your listeners that might be interested in, more of a greener investment, this type of iron in electric arc furnaces, so that are going to create steel from electricity instead of coal, it's been shown to be less carbon intensive. Mm-hmm. So, it is a desirable feedstock. They blend it in or they use parts of it. And anyways, so they're going to be converting their production over and capturing a premium price above what you see in the market for iron ore. But what I want to go back like a little bit and just, why do I like this company so much? So, what you're getting here is about 7 or 8 years ago, they actually bought this Bloom Lake mine out of a bankruptcy. So the previous owners had put billions of dollars into the resource and the capital infrastructure. I believe Champion Iron, the founding shareholder Michael O'Keefe and the CEO David Cataford bought these assets for under 50 million Canadian, and then quickly put them back into production and have since doubled the production at the asset. And now we're entering a period where the capital spending is behind them. So in the history of this company, they have, not ever been in a period where they're not making big capital investments. This last project here to upgrade is, I believe, 80% done. It'll be in production next year. So a real inflection period on going from spending to, accruing cash.
So the ticker on this is CIA. Mm-hmm. And I think this point that you're making is an important one, because if you look at the last 5 years, it's such a cyclical stock. It bottoms at $4, it tops at $8, and then it's rinse repeat for the last 5 years. So now it's moving up from $4 a share up to $5. My question was going to be, does it do that again? Does it go to 8 and come back down? But your point around, it being at an inflection point, I wonder if that takes it to a new part of its journey.
Mm-hmm. Yeah, well, myself and all of the shareholders that are involved, which is quite a small shareholder base, actually, because, I was speaking with the company not that long ago, and I think they could, in 4 or 5 investors, wrap their hands around 50% of the stock. So it's quite tightly held. But if you look at the assets in the company, both the producing assets and what they have as future development, you can easily make an argument that the replacement value is, double today's share price, maybe even triple, if you want to be, cute. So I do believe that, as they come into this premium production, some people might be waiting to see what's happening here. Mm. And the other thing, again, investors should be aware of is things trade on sentiment, right? So sentiment right now is like China is out of favor. A lot of the steel production's in China. A lot of this goes overseas right now. So if you want to be bearish on China, you're going to be bearish on Champion. Mm-hmm. But I just think that that isn't a long-term view because steel is needed. And having supply, especially there are still companies that are looking at the carbon intensity of what they're doing, or even just the supply chain. Where is our supply coming from? So as more electric arc furnaces come in to play in North America, this is a closer supply than a lot of the iron resources that are out there.
I'm pretty well covered for only a $3 billion market cap company. 17 analysts and 14 with a buy, just to give a sentiment on what the sell side thinks. We've got your second idea. We haven't talked about uranium this whole show, and it's because I knew it was coming up here. Denison Mines is the way you want to play uranium. What a shot out of a cannon these uranium stocks have had. Denison, though, has not reclaimed its highs in 06 and 07 the way maybe like a Cameco has gone on to make lots of highs. Talk to me about uranium. Is it a bubble? Why are you picking Denison?
Yeah, sure. So we've owned Denison, I think, since 2023, maybe a bit earlier. And
good for you. It's done well.
Again, I'm not, I just want to say the CEO there, David Cates, he is so exceptional. Every time I sit down with him, I learn something. I mean, he has built a career in uranium, and it's a very unique market, and especially on the actual marketing side. So selling the uranium, people always talk about like a spot uranium price. Spot uranium is irrelevant. I mean, most of these things are contracts. And David and his team actually, apart from like accumulating uranium mining assets, they've also been very good allocators of capital in the uranium market. They managed a company which is now basically the Sprott Uranium Trust, so very astute in how to buy and sell physical uranium, which will benefit them as their mine comes into production. So what do I like about uranium? Just starting there, we invest in everything in resources, and I believe that for a growing and improving quality of life, we need all of the resources, fossil fuels and renewables and, whatever else we end up discovering and capturing over time. But uranium, as far as like a green baseload electricity, it just can't be ignored. And I think there's 70 nuclear reactors globally, like under development right now. So just that will increase the, demand for uranium by about 20% in the coming years. And Canada is like the second largest endowment of uranium in the world. And I would argue the only jurisdiction that has values that are aligned with a lot of the countries that are now looking to, bring nuclear reactors, and whether those, be small nuclear or whatever they decide to pursue into production. I think they're going to want supplies from countries like Canada.
And does that mean we move, like, what does that do to the supply-demand dynamic? Like, how scarce is this resource based on the demand projections?
So again, I'm not the macro expert on it, but if you go to any of these uranium exploration or development companies, you can get the chart from them. I think that there is a very near-term, delta between supply and demand, but if we go out 5 or 10 years, it's quite large. And that's why, people are getting very excited about bringing on new uranium mines. Of course, these are long capital projects. Things are going to change in between. But, whether they're 25 or 30% wrong, they're still in the right direction. There's a gap.
Your third pick is Paramount Resources, natural gas.
Yes.
And this one cut its distribution this year. Talk to us about maybe some of the challenges it faced this year and why now is a good entry.
So Paramount is something that, we at Dean's Knight have owned since the late 90s, either equity or credit or both. They have been around since 1978. It was founded by Clay Riddell, and his son Jim runs it now. And I've always liked Paramount, and I feel like Paramount's always been a little bit misunderstood. Speaking about the distribution cut, so what happened here with Paramount, which is a really good example of what they've done over the years, but they have a process, and I don't know how Jim says it, I may be misquoting him, but they're trying to get low-cost capture, so grab land and opportunities, then delineate it, so drill it out, prove it up, develop it, and then harvest it, whether that means keeping it for cash flow or selling it.
Mm-hmm.
So what happened at the end of last year and then closed early this year is they sold about, I think, 3/4 of their production to Ovintiv for what was, Ovintiv is a US company, for what was about 80% of their then enterprise value. So a little over $3 billion. They distributed $2 billion of it through a special dividend, and then retained a billion or $1.2 billion to grow the company from there. So they cut the dividend when their production dropped by 60%.
Because they didn't have those assets anymore.
Right.
So it wasn't like a strange dividend cut.
No. And then what I think is so exciting about Paramount is, they're growing now, from the close of the transaction for the next few years at over 20% a year or somewhere around there. I mean, no one's growing in Canada. We went back and asked about the junior, if I'm a resource investor, like, yes, I want some steady eddy, kind of the Tourmalines or ARCs of the world, but I want growth. Like that's what my shareholders are looking for as well. And Paramount provides that. And it's totally funded. There's not going to be any dilution, and they're taking, they're going to maybe have around 30,000 production when they close the deal, 30,000 BOE a day. They're on the path to, I think they have projects commissioned up to 60 by the end of next year. And then if they make an investment decision, which I believe is getting close on their Montney asset, and I'm not sure how many people you've interviewed in energy, but the Montney is a pretty desirable asset right now. Theirs is called Sinclair. That would take the company to 120,000 BOE a day. So from 30 to 120 and, within 5 years' time, no foreseeable dilution. I just think it's an excellent outcome.
Stock's up 40% so far this year. It's outperformed, maybe peers like Tourmaline and ARC Resources. Do you continue to see those kind of gains in Paramount, and how does it stack up against some of the other nat gas peers? Like, how preferred is it relative to the others?
Well, I don't know how preferred it is on the street, but by me.
That's what I mean. Yeah. Like, who's your favorite child?
Who's your favorite child? I mean, I like the growth, and I like that it's funded growth. We don't have to go back to the market. The Riddell family here is like the majority shareholder. So, they have become incredibly wealthy off of this company. And I would like that to happen for my shareholders as well. And I think they're better positioned than ever. It's been misunderstood because sometimes assets, and I don't think it's a huge amount of dollars, but, they are tied up in land. Like some of the things they're developing today were in their presentation 10 years ago is like down here opportunities. And the market doesn't always see that long term. Shares turn over so quickly, and a lot of shareholders don't have the same objectives as like myself or obviously the Riddell family for holding something for the long term. And I will say, it's very liquids rich. So even though, yes, it's natural gas, they're producing oil as well. So you get a mix of those commodities. But yeah, I just think it's been a bit underfollowed, underloved. And yes, I'm happy about the share performance to date. But, if they develop on the plan that they're saying they should, then they'll have a lot more cash flow in the future, and that should accrue to the shareholders.
Kelsey, it has been so great to speak with you. A lot of under the radar names and insights, and I think it's going to serve our viewers. Thank you so much for joining me.
Thank you for having me. It was such a pleasure.